Hello traders, Gary Wagner here, about 12:30 in Honolulu, 5 o'clock in New York. It is Wednesday, December the 9th, 2015, and we're looking at a Dow Jones Industrial Average, although only off 75 points, has had a tremendous roller coaster ride throughout the day as it traded in terms of a range itself of about 350 points. We saw it trade to a low of 17,403 and a high of 17,767, market being up a couple hundred points at the first part of the day, only to close lower or off by about, as I said, 75 points on the day. So the real question has to become, have we seen some long-term damage or technical damage within the marketplace itself after seeing this market trade off for 3 consecutive days? Of course, we have been flat and we have been looking for a possible position to re-enter from the long side, but as this market now sells off for 3 days, it puts a long into question. We're certainly not out of the woods yet, and we really need to take a look at the most recent activity, whether it's through the Dow Jones Industrial Average or the Standard & Poor's, not only on a daily, but we want to look at a weekly as well as a short-term study so we can see the kind of activity we witness in the marketplace today. So first, let's go ahead and pull up a weekly chart. And what we're seeing on a weekly chart is actually fairly ominous. Now, it doesn't mean that we're going to sell off, but you get these various patterns. Now, this is a 3-river evening star, green candle, star, and then red candle. And what we're looking at here is a variation off of that, because you have this large green candle. You have 2 stars gapped in the center, meaning this, of course, is a week. So you had 2 weeks with a very, very small range between where it opened on Monday and closed on Friday. However, when we look at last week's weekly doesn't really tell the picture, because although it closed positive, this small green candle, look at how it came off of that low, and that's extremely bullish. However, the follow through this week has really created this long red candle, and it is that red candle that really completes the 3-river evening star formation. Of course, to take this, and we don't trade off a weekly, but just to give you an idea, but to take this particular call, we would have to see not only this week close solidly lower, but we would also have to see next week form in that way. In other words, we would have our red star. I don't have red up, I have yellow, but this would be red, following with a lower low and a lower high. Now that's on a weekly, but what I found really interesting in today's market activity was the intraday, because the intraday really showed you the kinds of moves that we saw in the market. Now, realize this. The market starts, this is a very, very short-term chart, and the market starts right here. This is the beginning of the trading day right here, and the market definitively opens, trades a little bit lower, finding some support right at around 17,500, trades up, trades sideways, and then it rallies up a couple hundred points. This is where we get this high coming into the marketplace itself. But from there, it was all over, because we saw this market go really from positive 200 to negative 100, then closing mid-range through these lows to really close, in essence, down 75 points on the day, but well off of the highs of the day. So how did the Standard & Poor's fare? Well, they didn't fare very well at all, but the one thing that we can say is that we had a tremendous range in the market, high 2079.75, call it 2080, and the low on the day is 2034. So tremendous swing. And in regards to the S&P, it definitely closed near the lower end of the range. But one of the most surprising moves that we saw today was a dramatic decline in the dollar, off over 1%, I believe about 1.5%. We'll look at that in just a second, but closing at or trading at 97.34. You can see that we attempted to stage a rally over the last couple of trading days. When we take a look at this daily chart, what we see is this was that dramatic sell-off that we had last week. This, of course, is Wednesday, Tuesday, Monday. On Friday, then, it tried to begin to stage some sort of a rally. You had this bullish harami. You then had a higher day again after that. But if you look at the size of the candle and the fact that it closed so far off of the low, it wasn't that convincing of a higher high on the day. And then we had the red candle, and today a meltdown, and this meltdown occurred taking it below the 38% retracement level. So with that in mind, when we look at the Standard & Poor's as we did, we want to take a look at where it is sitting in terms of not so much the highs and lows, but the 50-day and 200-day moving average. So we've gone ahead and pulled up our daily chart, and this daily chart contains our longer-term 200-day moving average. That's the solid line. The dotted line, of course, is our 50-day moving average. And the one thing that we can say without a question of a doubt, which is definitely gives us some bearish sentiment, is when you consider that as of yesterday's market close, we closed just at the 200-day moving average, but we did not close below it. And what we were looking to see is when this market hit this 50-day moving average, because that has guided us on the last two trades. Our trades came in here and they came in here. We've got a little bit different scenario going on, and that we now have a close that's below that. Now, we also had a close that was below that, but it also traded higher on the day. That was an intraday low that it came off of. Now, this is also an intraday low, but it did not close in any way in a positive manner. In fact, it had a tremendous high that it came off of. And when we see that it opened just at the 200-day moving average and closed just below the 50-day moving average, my sentiment is that we've got a market that we really need to see where the dust will settle before we enter another trade. So we're going to remain sidelined with no trades in the S&P until we see what develops over the next couple trading days. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another Trending Markets. Bye-bye.